Broad-based pressure in numerous areas of the market as bad news is bad news, growth worries trickulating or gushing into the market. We're going to break it all down. Lots of earnings, unemployment report, technical charts, tackle today. Coach Matt, Coach Mark with you. We're going to start with the technicals. The broad-based pressure is, just that, broad-based. We're seeing support breaks in the S&P. We're seeing pressure in small caps. We're seeing pressure in the Dow. Matt, break down the technicals for us.
Yeah, very quickly on the index front, I felt the market was going to recalibrate this week, and the market has recalibrated this week. It's just all on the downside with violations of support and increasing volatility practically everywhere. Whether you want to talk about on the negative economic side of the equation or the negative earnings side of the equation or them, misstep out of the central bank this week, it was a hell week, and it all went to the negative side of the equation. And so just some recent violations of support and some pretty massive spikes in volatility. Let's start on the S&P 500 as we're looking at a violation of the 50-period moving average and the previous level of support. You look at that on a weekly chart, and now you're at that 20-period moving average on the weekly chart, which was the exact same zone on the S&P 500 that we did see the selling in the broad market stop the last time we did this song and dance routine. I know it feels like a world away, but it was only back in April where we went through a standard market correction. This is now a standard market correction. And the ultimate question, whenever we go through correction language in the market, is this just a correction or is this something bigger than just a correction? And that's going to be a little bit of time as we digest that debate in the market. But from a technical perspective, it's really simple. You hold the 20-period moving average, and then we can start talking a little bit about a support build. But that's kind of been the equation throughout this entire selling process, waiting on those support builds and ultimately that confirmation. We just haven't got it. We continue to see the selling pressure. And so at tackle trading, we don't like catching falling knives. We like to let them hit the ground, and then we like to get them in reversal analysis. And so I do like the 20-period moving average sitting at the or the S&P sitting at the 20-period on the weekly chart. But you got to see that not just pivot. You got to see that go through proper reversal analysis, and that starts with a support build, double bottom, working back up into resistance. And the reality is, this week, as volatility did come into the market, we are seeing the market go through a little bit of the exact same thing. RSP the last 2 days, big down. S&P, big down. You're looking at the RTY, 2 days consecutive, big down. This was kind of the thought process though, on the Russell 2000 as it was fighting that 225 breakout on IWM 2300 on the RTY contract. If the Fed was not going to provide a catalyst this week, the Russell 2000 small and mid cap stocks, they were going to get smoked. And 2 days later, that's exactly what is transpiring here. This is a stay away type chart if I've ever seen one. A few big days going up on a positive CPI report, a little bit of consolidation, and then a couple big down days following the evaporation of that positive type momentum. And so really kind of a tough look here on the Russell 2000. And you certainly would like to see that settle in and settle down before you start looking at those small and the mid cap areas of the market. What about the Dow Jones? What about the NASDAQ? When you're looking at the Dow Jones here, obviously everything is kind of going through the exact same things here over the last 2 days in the market. And so we're going to have to wait on that volatility settling down for everything in the market. And that's when you're really going to know what areas of the market are going to be looking for prime time on the bull side of the equation. Is once the volatility settles, you start to understand where the true damage is in the marketplace. Very similar to when a dam breaks, right? Dam breaks, flooding ensues. You don't know the true damage until the water starts to dissipate, and you can see that damage. Same type of thing with volatility. And so all the markets, whether you're looking at the Dow Jones, the Russell 2000, whether you're looking at RSP, whether you're looking at the SPY, or obviously the NASDAQ itself, which is where all the true selling pressure is kind of happening over the course of the last few weeks. Well, on the NASDAQ side of the equation, same type of situation, tracking this pullback here. And obviously, where you don't catch falling knives, big red, big red, big red, we want to see that slow down, turn around. Where can that slowdown turn around? Well, last week we were talking about the 20-period moving average. Now you got to be talking about it a little bit underneath that. Simple reality is the next moving average that we have is right around that 18,000 area, right around the 9 EMA on the monthly chart. You do have a previous pivot right around 18,500, which is right where the current market is. And so it'll be interesting to see if the principle of polarity plays out here, but it doesn't have any moving average support. And typically you need some moving average support to really kind of give that extra from a technical perspective, one way or the other, wherever it falls into from a catalyst perspective. The simple reality is you got to be waiting on reversal formations. Confirmation on weekly chart is short-term reversals on daily charts. You never want to catch the falling knife, but you certainly want to be ready to pick it up when it does stop selling. And that's kind of the mentality we have from a technical perspective right now.
Yeah, you're working overtime on a day like today, my brother. And a lot of the pressure has been on the economic front as bad news has become bad news in the market. We had soft data yesterday. The big one of the week, the labor market numbers on the monthly non-farm payroll came in today, and it just missed. You joked in the pre-production that labor market is going to take care of any remaining inflation, and we saw that wage growth come down. We saw the headline number on the unemployment rate go up. We saw the total jobs added, basically the worst ad that we've had in years, all around triggering growth worries in the economy. And those growth worries are manifesting themselves in the charts today. Matt, anything to add?
And quickly, and quite frankly, very quickly this week, the slowing growth conversation, and if that slowing growth conversation leads into something worse, that's going to be a fascinating debate over the next few weeks in the marketplace. But this week did not help the bull case at all on that. And I wonder if Powell wants to have a do-over on his normalization of labor comment on Wednesday. Following that mark, initial claims came in at 249 versus the 236 on Thursday. And then the labor market today just absolutely just puked. 114 against 176. That is a massive miss on the labor front. That's certainly not normalization. You can't make an argument that 114 is normalization in any capacity. And so even in the 240s, 250s on initial claims, that's not normalization. Normalization is 200,000, and we all know it. I don't even know what Powell was talking about with the normalization. So I wonder if he wants a little bit of a do-over after the last two prints that came out on initial claims in the labor today. But Mark, you are seeing it in the labor numbers hourly from an inflationary perspective. Real big misses here on the labor side, but also big miss on the hourly earnings. And this is a couple, 2-3 months in a row we've seen our average hourly earnings come in under the expectation. And so the inflationary saga, this is how it's going to work. The number one way to fix an inflationary problem is to go through a recession. That is the number one way to fix inflation. Make sure that nobody dares spend any money. That's a recession. And so, I think inflation does get put back into the rearview mirror just a little bit in this moment when we're all talking about whether or not this slowing growth type situation in the economy from a PMI number perspective yesterday and last week as well, labor this week. And then you couple that with the slowing growth we're seeing out of guidance reports and earnings in general out of big cap tech. Yeah, Mark, there's a little bit of fire to that smoke on the slowing growth argument.
Yeah, absolutely. It's going to be a fascinating Trading Justice podcast that we'll release this weekend. Very much looking forward to that
one.
Like lots to break down. This has been hell week as far as the total amount of data. And part of that has been just an incredibly busy earnings season. Two big dogs. Who else do you got? Give us some earnings data.
Listen, it was a big earnings day here today, and it was a really big earnings week here this week. There's no doubt about that. The two biggest stocks that reported earnings today were Apple and Amazon. Apple came through with a pretty decent report, I would say. And Apple coming out of this volatility, I think Apple needs to be looked at. They were one of the few of the Mag 7 that actually showed a slight increase in guidance. Nothing too dramatic, just 0.53, but it was good enough to kind of stave off some of that ultimate bear conversation on Apple. And obviously on a day like today, seeing Apple go up a little bit is certainly good for Apple. But once again, as this volatility in the market subsides, Apple's one of those stocks. Remember that super cycle on the iPhone. that's a legit analysis in my estimation. Tim Cook stopped short of talking about the super cycle, meaning, Apple Intelligence and the iPhone and, every consumer around the world upgrading to get the new Apple Intelligence and the new Siri and the new this and the new that. Apple's never had that big of an argument for a massive upgrade cycle, and now they do have that with Apple Intelligence. But Tim Cook did stop short of stating that's going to happen. He stated, well, we'll know once we start shipping them later on this year. But there was nothing in the report that suggested that the iPhone sales or iPad sales were weak. iPhone sales were really, really strong out of the report. And again, it does look like a super cycle could happen on Apple. So that's one to keep an eye on. Amazon, on the other hand, they did come through with a good beat against EPS, but there were some problems in their segments that they reported on, especially on the retail side of the equation. They also decreased Q3 revenue guidance by 0.63%. Consumer-facing company, very similar to Apple, but a little bit of concern there on the Amazon chart. Now, when you are looking at Amazon and Apple specifically, Mark, and I'm not going to look at every stock here today, there's a tremendous amount of them, but when you are looking at Apple's bucking one of the only stocks in the market here today. If you look at the heat map here, everything's red here today. What's not? A little bit of AMD. AMD got blasted yesterday, though. Apple, that stands out in a sea of red. There's no doubt about that. And so when you are looking at Apple, obviously it's bucking the volatility here today, but it hasn't really confirmed anything on the pattern yet. But it does look really good from a weekly chart perspective. It just needs a little dose of confirmation. And that confirmation is extremely important, because think about this from a NASDAQ perspective. Big up on Wednesday, big up, big up. But once again, did it get above those moving averages? No, it got blasted by those moving averages. Moving averages acting as a short-term resistance level. You have to respect them. And that's exactly what Apple's kind of fighting here. It's fighting the 20 period on the top side. It's fighting the 9 EMA on the weekly chart. I think the longer-term analysis wins out here. So Apple's certainly on the radar. What about Amazon coming out of their report? Amazon got butchered here today, and you probably need to put it on reversal type scenarios here. You never want to catch the falling knife. You want to let it hit the ground, but then you want to let it go through reversal type situations. If you like Amazon at the 200-day moving average, you're going to like it a heck of a lot more if it double bottoms, double tops, and gives you a nice little W formation to actually justify your opinion. And so whether you like Amazon or not, you're definitely going to want to have it on a reversal type situation and not just try to pick up the very, very, very low point on the chart. That is, unless the central bank does an emergency meeting and starts cutting rates before next September. I kid a little bit, but the reversal analysis still rings true on Amazon. Now, it was a big day in the energy side yesterday during the Traders Lounge. I made a statement. I expect ExxonMobil to beat. I expect ExxonMobil to perform a little bit better than Chevron, and that is actually what transpired here today on the chart. Now, on the actual fundamentals, Exxon came out with a beat, Chevron came out with a miss. It is really as simple as that. Now, Exxon kind of just stuck in a little bit of mud on the weekly chart. On the daily charts, got an overhead resistance at 120. When you are looking at CVX here, CVX just got absolutely blasted, and you will not be looking at CVX until you start looking at it at a lower point on the chart, and that low point on the chart feels really, really, really strong. Right around that 140 level, has massive, massive support right around that 140 level. So CVX a little bit of a stay away as it violates support, and certainly looks like it wants to come and test that 140 level. We'll see what ExxonMobil wants to do from a potential breakout perspective. I don't see those two stocks trending opposite one another. They can move different than one another quite often, but they don't typically trend against one another. So that'll be an interesting conversation over the next couple of weeks in the energy space, especially with ExxonMobil and Chevron. Now, rapid fire style, just if you are following these stocks, US Steel came out with a beat. Chemours here, just a really bad miss on Chemours, just came out with a negative 42 miss, just terrible on the miss side of the equation. They also decreased revenue guidance. That's a concerning data point. Clorox did come out with a beat. That does look a little bit better coming from the low point, but they did miss on the revenue side of the equation. Moving on out of the stocks in the news, Coinbase, big Bitcoin stock out there in the market. They came in with the basically in line on the EPS. They came in slightly in line on the revenue side, revenue up 100% year over year. That's an okay report coming out of Coinbase, but it's not going to knock your socks off. Roku came out with the negative. This is just a bad miss in my estimation on Roku. Not bad miss, just a negative miss on negative 24 cents. Revenue came in slightly above. They guided slightly above as well. A little bit of a mixed report coming out of Roku here today. Team, I felt was very, very interesting, and I felt like Team is getting caught up a little bit in the slowing growth conversation with the AI tech trade and the mega cap tech stocks out there, but a very similar analysis as well. They came out with a beat. I've seen beats across the board across all those stocks this earnings season. They also beat on the revenue side with a fairly decent 20% year over year revenue growth. But Team, very similar to earlier in the season with the ASML. This has been the storyline in all of the tech areas of the market, mega cap tech stocks, AI trade areas of the market. It is the slowing growth argument. And you can see that you don't see it in these individual earnings reports because everything's up 1%, down 1%. But when you compare that against last quarter and last quarter's guidance and the quarter before that and the quarter before that and the quarter before that, you certainly see this area of the market from an overall revenue perspective and a growth perspective slowing down a little bit. But remember, when things don't need to do amazing for the market to do amazing, and things don't need to be the worst in the history of mankind for the market to get a little bit volatile at the top. And so we're going to be fighting that volatility a little bit. We need to be a little bit cautious, especially on the mega cap, especially on those tech names. But again, if we start to see reversal situations, remember the market takes everything too far in the short term, both on the bull side, certainly on the bear side. We're seeing that play out here in stocks in the news today as well. GoDaddy came out with a decent beat. They're fighting an overhead resistance level. They also increased forward-looking guidance just slightly, but they are fighting some overhead resistance. I thought Cloudflare had one of the better reports of the day. In fact, I would say Cloudflare had I'd say Apple had the best report here today, but I'd say Cloudflare here had one of the better beats as well. They came in above that expectation. So Cloudflare gets a blue ribbon. Apple gets a blue ribbon here today. What does not get a blue ribbon and probably does not even deserve a participation trophy is Intel's earnings here today, as Intel comes out with what I would describe as just an absolutely terrible report. Catastrophic type gap when we're talking about a stock gapping from $30 to $20. There's context on Intel. Intel, that's lower than Intel's been in 90 years. Intel's getting absolutely slaughtered here today. Mark, they missed on EPS big time. That's an 80% miss. They missed on revenue. They decreased forward-looking guidance. They didn't just decrease. They might as well just cut it. We don't even provide guidance because we're not even doing anything in the next three months. They weren't done. They cut workforce. They suspended their dividend. And this is something that happens. It is rare, but it does happen. Companies have good news and bad news all the time. Sometimes they decide to rip the Band-Aid off and put all of their bad news into a single report. As an example of that would be Starbucks from last quarter. Starbucks from last quarter had an absolutely horrific report, and all of a sudden it flatlined and stabilized throughout the rest of the quarter. Did have a good little short trade on that throughout the quarter, but you get the point. It kind of priced that in throughout the entire report. Nike earlier this season had a horrific report, just an absolutely horrific report, and it's pretty much stabilized ever since then. On Intel has what I would describe as the worst report of the season by a wide margin. but they also decided to rip the Band-Aid off on announcing everything negative that they could have announced. And those negative headlines aren't going to be coming into the future because they just did it all in that one singular moment in time. It's a catastrophic gap type situation. You certainly don't want to pick it up. You look at it on a multiple time frame. It looks really, really, really tough on every time frame, but you do have support level around 20. You do have some pretty decent support level around 17 and a half. And ultimately you got support level around 13. I have no clue where support is going to build, but I do have interest in Intel after a reversal, after they priced in Armageddon, but it's going to be a traditional reversal and it's got to be a beautiful one. And it will probably take weeks to months, certainly not days.
Yeah, busy. Like, my gosh, tackle today, tackle month, the amount of data that came out just in the last 24 hours. Some of the pressures bleeding over to commodities. We saw gold try to take a move up, and then the volatility hit the market, came down. It's going to be interesting to watch pattern development. Copper's not doing much. Crude oil volatility. Matt, look at some charts in commodities for me.
Yeah, I think gold's fighting top end analysis. It's slightly overextended going into a breakout. I called for a high base yesterday. I don't see anything in the data today to suggest otherwise. Crude oil violating trend lines, patterns, concern on the economy. And if there's concern on the economy, there's obviously going to be concern on crude oil. That got blasted here today, and that's obviously a stay away and then some, speaking on the bull side of the equation. Silver needs to go through some degree of development because right now a kiss of death technical pattern is certainly not it. Now, on the copper side of the equation, this one does have some interest as it is one of the only commodity that is sitting at a massive support level, and that massive support level has not been breached. And that massive support level is between 4 and that 404 level. So keep an eye on copper. It's the one that is at support.
All right, thank you. Listen, we love our community. We're there every step of the way. Be sure to check the Trading Justice podcast out this weekend and come join us every day. We do an extended version of this tackle today. We call it our Traders Lounge, Monday through Thursday, every day. Come see what all the fuss is about. Join us for a 15-day free trial. Visit tackletrading.com, go to the store tab, sign up for that trial, and come join the fun.